Well, joining us now is Ruchir Sharma from Rockefeller International. And Ruchir, looking at this article, this report you put out, you would argue it is.
Yeah, this is the follow-up to what I had written in December last year, where I called this the mother of all bubbles. And the reason I had called it that was not so much because I felt the American market per se was a bubble, but the gap in the performance between America and the rest of the world had clearly reached bubbly proportions. And how do I measure that? I think if you look at valuations, if you look at the price performance, and then you also look at sentiment, everybody thought that the only place in the world worth investing in is America. And that also was showing up in the dollars overvaluation. So I'd say that what we are seeing now are the early signs of that reversing. And my feeling is that capital has barely moved to reflect this change. There's been a fundamental change as well, that the other countries are getting their act together under such enormous pressure that they've been facing of capital flight and economic underperformance. So I think that this massive gap which had opened up in performance between America and the rest of the world, which got to be known on Wall Street as American exceptionalism, that gap has started to close, and we still have a long way to go.
So when you say it started to close but still has a long way to go, how much further does it have to go? And I ask that knowing that we just had a very swift drawdown in the S&P, 10% correction in a matter of weeks, even as we have seen other averages like the DAX, for example, in Germany touching record highs.
Yeah, but if you look at the underperformance here, this goes back 15 years. So all we have seen is one very sharp quarter of the reversal of that. And that happened because America's economic growth and earnings were also very superior to the rest of the world, particularly in the last couple of years. But as I made the point to you in the past as well, I think that a lot of that happened because America's economic growth was artificially inflated by very heavy government spending and by the role of government in general. The American economy has never been this government dependent. As it comes off that incredible amount of government over-dependence, partly because that was the natural thing to happen, and partly because that's what the Trump administration is also trying for, I think the growth gap and the earnings gap between the US and the rest of the world also closes. So now, one very simple way of looking at it is this, that America's share in the global economy today is just under 30%. America's share, let's say, in the global MSCI equity benchmark is still close to 65%. So this is a massive disconnect. Now, America will always remain the world's dominant capital market, but even a decade ago, America's share in that index was below 50%. So can we underperform significantly enough for that share to get back to around 50%? I think that's possible. So in the next 3 to 5 years, the American stock market, I'm less inclined to believe whether it goes up or down, but I feel very strongly that the American stock market underperforms the rest of the world, and America's weight in the global benchmarks comes back to a more reasonable level of closer to 50% rather than 65% that we are today.
So we're seeing the economic data here in the U.S. soften, and you can make the argument that that softening was happening even before President Trump was inaugurated, took office, and we started hearing all the noise and seeing all the uncertainty around trade policy and tariffs take effect. It raises the question, if the U.S. economy continues to soften, perhaps even go into a recession, can the rest of the world continue to, I guess, close that gap and outperform?
I think so, because this was a very unusual cycle, Morgan, because what happened in this cycle is the following, which is that this time when the American stock market went up, particularly in the last couple of years, the rest of the world's stock markets did not go up in sympathy. If you look at even the past bubbles like 99, 2000, when the American stock market was on turbocharge, the other stock markets also got a massive lift from it. This time that just didn't happen because so much capital got sucked in to the United States away from those markets. Foreigners, especially Europeans, piled into the American stock market like never before. So now what you're seeing, in fact, is this negative correlation. And we're seeing it even in the past couple of weeks, that as the American stock market has rebounded a bit, it's not surprising, in fact, that the European and even the Chinese stock markets have been softening a bit. So this is a massive change in relationship. We are used to thinking of the very past relationships, which is the fact that whenever the American stock market goes down, the world stock markets get a lift. When America goes down, the rest of the world also goes down with it. This relationship has fundamentally changed. And this is a big behavioral change, which I think has not been properly appreciated or internalized. And yet the markets are showing you that there is now almost a negative correlation between America and the rest of the world.